Whatever happened to the butterflies? Whatever happened to the summertime? And the feeling I got the first time that I saw your eyes.
Hey guys and gals, welcome to this week's pre-foreclosure daily grind and this week's pre-foreclosure tip of the week. Chris the drummer Bose, Bob LaChance, and let's get to this week. This week is actually about what lenders are doing to protect themselves from potential lawsuits. Okay, that's number one. And number two, I'm just going to go over a couple different discount ratios where, you know, a lot of you guys make sure that you write these down because this is gold we're going to be getting into. And this is as of January 2010, some typical guidelines. Because again, this could change tomorrow. Okay? Let's get into our story about what lenders are doing to protect themselves legally. Okay? We have a story here that Chris is going to go over with U.S. Bank. He had a conversation with Loss Mitigator for about 15 minutes on exactly what they're doing to protect themselves, because there's been some case study of sellers going after lenders and suing them because they claimed they haven't been updated on what was exactly going on with the short sale process. So go ahead, Chris.
So basically, the conversation I had a seller contact me on a short sale with U.S. Bank, and the seller was all panicked. They had gotten a letter in the mail, which basically said that the short sale, because the file was incomplete, that the file was closed, and so they were wondering, you know, what's going on, what's the status.
Freaking out, wondering.
Yeah, exactly. So basically, I said I'd follow up on it because I told them that the last information that I had gotten from U.S. Bank was that the file was, everything was there, it was all complete, and it was set to start the process. So I called the bank and I informed them of the letter that the seller had received, and sure enough, the process was in motion. The letter they had received was dated the day before I had resubmitted the package, and it was uploaded in the system. But anyways, she explained to me. She said no matter who's the contact, whether it was you or her agent or her attorney, we would have to send either direct mail to her, or we would have to at least call her on a regular basis to inform her directly from us to her what the status is of the short sale. Okay, so that's kind of the situation. The reason behind it, okay, and U.S. Bank is just one of many lenders that do this, either via direct mail to the seller's house or phone calls. The reason behind this is because it's to cover their butts, basically legally. Because here's this. We'll give you a little scenario here. Imagine you're a seller. Okay, you're a seller on a property. You got a short. You got to do a short sale. You got no equity. You can't afford a loan modification.
Yeah.
Got to sell it.
Or you even get declined for one.
Right. So you contact, and it can be anybody. It could be a loss mitt company. It could be an agent. It could be an attorney. It could be anybody who comes across your path and says, oh, I can do a short sale for you. No problem. I'll get your foreclosure postponed, and I'll get this thing accepted.
False promises. That's what they're basically protecting themselves against companies like that.
Exactly right. And this person comes to you and they say, "Oh, sure, no problem. I'll take care of it." You give them everything. You give them all your information, and you trust that they're doing it for you. And then a few months later, 4 months later, find out that your house has been foreclosed on and you're getting kicked out. The sheriff shows up and kicks you out of your house. Not a good day. So what are you going to do? You're obviously going to go back and you're going to try to get a hold of this person who promised to do the short sale, and give them a piece of your mind. But obviously, if this person, let's say, had no intention of doing anything, and they wanted to try to just get money from you and run, and had no intention of doing anything, obviously you're not going to be able to get a hold of them, right? They're not going to answer your phone calls. Why would they?
And the seller hires an attorney who just wants to sue somebody.
Right.
And they're they don't even collect any money up front. They collect a portion of what they'll get in settlement.
Exactly.
Hypothetically.
So obviously, here you are. Now you can't get a hold of this person that promised to do this for you. Who are you going to go after next? You're going to go after the bank, and you're going to say, "Why didn't you tell me what was going on?"
Bank
directly?
never notified me. Bank never did this. Bank never did that. So that's the reason why banks are doing. They're sending a lot more direct mail, so then they have their butts covered. So
right.
So the big takeaway here is make sure if you're sitting with a client, let them know every step of the way what is going on. And if they do get a letter that states that the file was closed, don't freak out. Call you right away.
Right.
Okay?
And typically what we do is we tell our sellers, we tell the homeowners we're working with, not only let us know of everything you get in the mail from the bank or phone calls, you know, if you end up getting a negotiator on the phone, but also stuff from the court, because the same thing can apply there. You know, obviously the homeowner has to be notified of everything going on from the court, and you know, we just it's better off, you know, instead of panicking, instead of freaking out, you know, send it over to us, we'll take a look at it, or we'll talk over the phone to discuss it.
So that's basically how the lenders right now are doing a lot of direct mail pieces to the homeowners and letting them know what's going on in the process. It's been very, very, very prevalent right now. It's been happening more and more. So just know that, just so you can set expectations up front. All right, that's number one. I know that was a little long-winded, but we do apologize, but that is, you know, that's really important right now. Secondly, Freddie Mac and Fannie Mae, what they're allowing right now on second mortgages, and FHA. Freddie Mac is allowing right now about $3 grand. Okay, about $3 grand. FHA, and this is when. Sorry, let's take a step back. This is when Fannie Mae, Freddie Mac, or FHA are the investors on the first mortgage. What they are allowing second lien holders or second mortgages. Okay, Freddie Mac, they're allowing, as of today, about $3,000 to a junior lien holder. Fannie Mae, it's either $8,500 or
10% of the principal.
10% of the principal. Okay.
For the 10% of the principal for the second.
Of the second mortgage. FHA, $2,500 as of today. That could change tomorrow because the powers to be up top could, you know, send some new guideline or something down
That they think is going to help.
That's going to help. But anyway, that's those are this week's 3 or 4 pre-foreclosure tips of the week. Again, check out ManageMyShortSale.com. As of next week, we'll have a whole new short sale builder in there. It's going to be turbocharged with deal analyzers, all that kind of stuff. So it's going to be unbelievable. WordPress websites, everything's going to be pretty much done for it. It's going to be awesome. So ManageMyShortSale.com, check it out. You can take it for a 30-day free trial. Chris the Drummer Bowes, Bob LaChance getting back to you with this week's pre-foreclosure tip of the week.
Somebody wake me up. Somebody wake me up, yeah. Somebody please wake me up. Whatever happened to the butterflies? Whatever happened to the summertime? And the feeling I got the first time that I saw your eyes, I know. Whatever happened to the honesty? Went out the window with the best of me.